Hello everybody, good morning, good morning. Is it still morning? Let's see. We've got a few minutes left. It's still morning, okay? It's been a long day for me though, but I'm still having my coffee, so it's still morning. So hey, I'm gonna tell you guys about a couple of stocks today. But first, I wanted to mention to you guys, some people were asking why I wasn't talking about some of these stocks that are darlings of Wall Street, like Tesla and Apple. And this is the reason why. I'm not talking right now about your long-term things. I'm not talking to you about Coca-Cola and Walmart, right? And that's what Tesla and Apple are, right? They're the new Coca-Cola and Walmart. What I'm talking to you guys about here is the stocks that have bottomed out because of the coronavirus, and they're really, really low, and we're buying right now because they're going to start coming back up. That's what this whole thing is about, is what stocks to buy now during this COVID crisis, okay? And so for those of you who are kind of just tuning in, the industries that really bottomed out were gaming, the resort industries that have stakes in Las Vegas and whatnot, the cruise lines, and oil, and for kind of different reasons, partially because of COVID and partially because you had a price war between Saudi Arabia and Russia, and so you had two things that really drove the price and hammered the price of the oil stocks. Okay, so that's what I'm talking to you guys about, is stocks you can get into now that have bottomed out now during this crisis, and you can ride that wave back up, and it's gonna go up. Another thing is, some people were saying, are we sure the market has bottomed? Like maybe it crashed over this coronavirus and then now it's going to come up and it's going to crash further. That's not something we historically see. Let's look back at 9/11. You can look at the crash in 2008, but let's look at 9/11. Okay, perfect example. You had something happen that crashed the economy, and just like in this one, the canary in the mine was Las Vegas. The first thing people are going to quit doing in a time of crisis is going on vacation, or not going to the trade show, or whatever it is that Vegas makes money on, all their trade shows and conventions. And so same thing happened then. And had you bought some of these gaming stocks back then, you would have made 70 times your money. It's ridiculous money that was made by people who bought those gaming stocks during that crash. Okay, so the same thing kind of happened now with COVID. Okay, so I've been recommending the gaming stocks: Wynn, El Dorado Resorts, Caesars, MGM, Las Vegas Sands. Today though, I want to specifically recommend Wynn. Okay, WYNN, Wynn. Right now, MGM seems like it's a better buy. MGM is trading at let's see here, at 41% of its 52-week high, so it's really discounted. Wynn is trading a little bit higher. It's 52% of its 52-week high. But I'm going to recommend Wynn. Let me tell you why. Again, we missed the bottom. The bottom was a week or so ago. So these stocks are already starting to rise. They're already starting to rise up. But this is still about half off of its 52-week high. Its 52-week high was 153. It's trading today at 79. Okay, and this is why. Let's compare it to MGM. MGM has a large collection of resorts, but they're kind of a hodgepodge. They own the Luxor, and they own MGM Grand, and they own Mandalay Bay, and they kind of own this assortment of resorts. Not so much a brand, but Wynn is a brand. Their resorts are called Wynn and Encore, and it just seems to me just easier to scale for any kind of growth because people are already familiar with that brand. People know what to expect when you walk into a Wynn resort: top-notch, high-end, high quality. And so and of course I have a huge presence in Asia, the Asian gaming market. That's really where all the money is now. It's in that Asian gaming market more so than Las Vegas. So I want to recommend Wynn today. WYNN. Of all the gaming stocks, that's the one I'm going to recommend today. And that's why I think they just have a much more scalable brand. So when this thing comes out, they're also going to be able to really continue with their growth and stuff. So I want to recommend Wynn. The next thing is I want to recommend, as far as the cruise line stocks. The cruise lines are the last great frontier of bottomed out stocks right now. They're the ones where are still really low. I think a lot of people still are unsure, like, are they ever going to come back? Are people ever going to go back to cruising? But they are. The cruise lines have a great product. They have a great business model. And like Arnold Donald, who is the CEO of Carnival, says, every market is underserved. There's still so much room for growth in the cruise line industry. Lots of room for growth still. And so that's an industry that is going to come back. But of all the cruise lines, I'm most heavily invested actually in Carnival. But today I want to recommend Norwegian. Norwegian's trading at the best rate today. It's only at 20% of its 52-week high. 20% of its 52-week high. So we can potentially make 4 times our money on this stock if we buy it today. But again, it doesn't have to get back to its 52-week high, and it's probably not going to, probably at least not in a year, but it's going to double. It's going to double, okay? It's at 20%. So again, it's trading at 11.71 today. If it just gets to 22, we've doubled our money, right? So I want to recommend Norwegian today. And lastly, the oil stocks. I'm talking about a couple of them. The best buys, of course, are the ones that are in bankruptcy right now, like Chesapeake and some of these. But the one I want to talk to you guys today is Continental, CLR, Continental. Continental is not in bankruptcy, and their stock is already starting to rise. It's already going up. I bought some a couple of weeks ago, and it's already appreciated, okay? And so today, it's trading at 32% of its 52-week high, okay? Back in, let's say if we don't even worry about their 52-week high, which was 43. If we just get back to where they were in January, which was at 30, you know, that's 3 times our money, right? That's 3 times our money if you can just get back up to 30, you know, in 12 months or so, right? Then we've tripled our money, okay? And then the last thing I just want to just mention, I was talking about it yesterday, was Hertz. Hertz is about to enter into bankruptcy, it's looking like, but they've got some financing to get them through that, and it's a bottomed out stock. It's a bottomed out stock, $3.03. It's trading today, 52-week high of $20.85. So again, you buy at $3 a share, hold on to it, let it get through this process. It doesn't need to get back up to $20.85. If it just gets to, you know, $6 or $7 a share, you've doubled your money. Okay, so I think that you can double your money on all those stocks I mentioned today. Okay, one you're not going to double your money on, but is rising, is Camping World. I mentioned Camping World yesterday. What's funny is Kramer's on TV talking about it today, but I was telling you guys about it yesterday. Bought it yesterday at $9.76. It's up to $10.92 now, so it's already gone up over $1. So easy math right there. Bought 1,000 shares yesterday. You know, you'd be up $1,000. So I think Camping World's gonna go up, and they're trading at about 58% of their 52-week high. So might not double your money, but it's a good buy. It's a good buy. So that's what I have for you guys today. Okay. Want to really recommend Norwegian. Want to recommend Wynn. Want to recommend Continental. And then, you know, have a look at Camping World. And if you're a gambler, have a look at Hertz, and you might make a fortune. Okay, so that's what I have for you guys today. Again, remember, the market bottomed out because of this COVID. Now is the time to buy, and the ship is sailing. The ship is sailing. These stocks are already starting to rise. So if you're gonna buy, you got to buy ASAP. Okay. Thank you guys. Hope you have an awesome rest of your day. Bye-bye.